Okay, everybody, it is me and you. I love this part. All right, everybody, look. Wednesday, June 15th, 2022. Are you ready? Are you ready for this day? I am. And if nothing else, well, not only is it going to be interesting, it's already started. Let's talk about what's already going on here. Let's take a gander and talk about the 10-year yield. In case you haven't noticed, maybe you didn't, it fell 11 basis points. It has dropped 11 basis points in the pre-market. Now, let me ask you, if you had to just guess for a moment, just throw it out here. Who's buying the debt? Duh. It's the Federal Reserve. They're getting in here and attempting to stabilize the debt market. No surprise to you. No surprise to me. I've explained to you that the Fed has to do something. Let's see if it works, okay? So obviously, it's the Federal Reserve now getting in here and buying the debt. Understand, I've explained this to you already. Any kind of action by central banks, and we have to talk about the European Central Bank in a moment here, to stabilize the debt market is going to be massively inflationary because, again, they can't just wish this to happen. They have to get into the market, they have to buy the debt, and in my opinion, gauging on what's going on in the debt market right now, 11 basis point drop, you got to be kidding me. Overnight, that's the Fed. They're buying. Now, the European Central Bank is concerned about fragmentation in the debt market. Fragmentation. So what they're telling you, the European Central Bank, is they're concerned about an implosion here. So the European Central Bank is going to take action, which is also going to be massively inflationary. They can't stop this, okay? Nor do they want to. You all know that. In my opinion, they're going to take some kind of action. I think it's already happened with regard to the 10-year yield here in the United States. The Federal Reserve is going to attempt to stop the bleeding to a certain degree. Now, we got this 11 basis point drop in the 10-year yield. Stock futures higher across the board. Imagine my shock here too. Look, like I said, if anything, this is going to be interesting to see how this plays out moving forward. And what happens today? I mean, it's widely expected. And if anyone doesn't understand this, I don't know what to tell you. The Fed is going to raise the federal funds rate today, 2 o'clock. 50 basis point, 75. I'm not even sure. It's something, all right? We're going to see how the market reacts to that. But more importantly, we're going to see how the market reacts to what comes out of its mouth. It being Federal Reserve Chairperson Powell himself, freaking thing that he is. All right. So, on the back of this, 10-year yield dropping pretty substantially today. Stock futures across the board higher. We got a dollar that's a little bit weaker today. We got gold and especially silver catching a very nice bid here. Cryptocurrencies remain under pressure. Bitcoin around 21,000. All right. We'll keep our eyes on that. We'll see where that goes. But to me, the biggest thing this morning is watching that drop in the 10-year yield. It's getting out of control. I think they had to do something, and I'm not surprised, neither are you. We knew something was going to happen to stop the bleeding here. Is it going to work? Well, like I said, any action that is taken by central banks, the European Central Bank as well, fragmentation, okay, they're concerned about an implosion in that market, is massively inflationary. Massively. So just be ready for that. Now, got some interesting economic news today. So the factory here in the United States, factory activity index is negative. What you're not supposed to know, if you were to go on to, let's say, any of the mainstream outlets right now, they're going to tell you that factory activity is picking up. However, what they're not going to tell you is the index itself is negative. That means factory activity is, guess what? Contracting along with the rest of the economy globally. So again, another proof positive here that the economy is dead. Retail sales missed the mark, falling 0.3%, taking everybody by surprise. Nobody saw this coming. Oh no. Turn on CNBC and Bloomberg and They don't understand it. They just don't get it. Duh! Yet again, can't make any of this stuff up, people. It's always a big shock because, look, they have no idea what they're talking about. These people, all they do is read a script. Lovely. All right, so look, that's the setup this morning, and I think this is profound, what happened this morning with the 10-year yield dropping like this. Is it going to last? Let's see. Let's see what happens here. Are they going to try to stabilize it more? Maybe. Is it going to work? Well, time will tell, especially here with the European Central Bank talking about fragmentation in the debt market. They can't tell you meltdown, crash, whatever they want to say. They can't say it. So they're going to use these fancy words. Fragmentation. It's fragmenting. Duh, duh, duh. Make it up. All right, look. I will keep all of you on top of this as always. You know that. So let's just sit back, watch the shit show. I don't know another way to put that. All right, people, I'm going to let you all go. What else is there to say other than please do subscribe to my free newsletter. Link in the description of this video. And I will fire things out throughout the day. I'll give you market updates throughout the day. Tell you what's going on throughout the day. What I'm doing throughout the day. And it gives you a little more insight into what's going on here. All right, this guy right here loves you a lot. I mean it. Please get it out here. What do you think? I want to hear from you. This pretty precipitous drop here in the 10-year yield. Does this surprise you? I think we all expected something to happen. Did we expect it to happen this soon? I don't know. There's no doubt in my mind at all. At all. This is the Federal Reserve. They're getting in here yet again and they're buying the debt. This is a no-brainer in my view, especially on the back of what came out of the mouth of the ECB. Fragmentation, fragmentation, fragmentation. Just lovely, isn't it? All right. See all of you later. That's it.